Hello everyone and welcome back. I'm going to do my second video now. The first one that I just did about a half hour ago is uploading and processing right now. I have the links in there for Rob, Sarah, and Jermaine, and I have the links for Rob and Sarah's YouTube channel. So let's take a look at this week's watch list. I ran scans last night. It's a fairly short list. I don't like working with a big list because like I said, I do have a day job, so I can't sit and bounce around between 25 screens. I pretty much have what I can show on my monitors at one time, and that's it. I try to keep it to that. I'll set alerts and whatnot, but you can see here I have inside week up, and let's scratch all these out because these were either already triggered or they were canceled because they were last week's alerts. So none of these mean anything. In fact, you see, if you watch the last video, you'll see that we already talked about these. So let's get rid of up to HD. And some of these alerts I set throughout the day. I maybe get an alert for a 30-minute inside bar on HD. I'd set an alert for a break above that bar, so that's why there's alerts on here that weren't on the last video. So I don't just set alerts over the weekend and then don't touch them till the following weekend. It's kind of a dynamic thing. I'm always adding stuff. I don't remember why I canceled Pepsi. Actually, I probably screwed it up because there it is there. So I do have it on there. So let's get rid of these just so we don't get confused here. And let's start out with LVS, Las Vegas Sands. In fact, you know what? Let me start down below because I'm going to start with, you see, I have inside month up and then inside week up. Let's start on the monthly scan. So we'll start at the bottom here with Nike. So Nike monthly scan, inside month. Yeah, I could set alerts for breaks below this candle, and it very well could happen. I'm not saying it won't happen. It does seem like maybe we're, on a way to bouncing back up to the upside now. That may or may not hold. It may be a dead cat bounce. Monday we could go right back down again. So have to see how that plays out. But for alerts to the upside, a break of this candle, you see we have a 3 candle here, which is an outside candle of this one. Basically what a 3 is a bullish, or not a bullish engulfing, it's just an engulfing candle. It completely engulfs the previous candle. A 1 is an inside candle, a 3 is an outside candle, and a 2 is anything else. If a 2 breaks down below, or it breaks up above, it doesn't do both. If it does both, it's a 3. You can see here we have a 2 candle that's red, but it is a 2 up. This is a 2 up because it broke above the previous candle, so it's still a 2 up even though it's red. That's where some people get confused when they're trying to learn the strat. They see a red candle and see a 2 and they assume it's a 2 down. This is still considered a 2 up. Even though it's a red candle, it did break the previous high, so it is a 2 up even though it's red. So you have to keep that in mind. That's one of the things some people struggle with. It seems kind of confusing at first, but once you do it for a while, you'll get the hang of it. It took me probably 6 months to get the hang of the strat, and even then I was just barely keeping my head above water. I was semi-successful trading before using moving averages and oscillators and whatnot. And then I kind of took a step backwards when I started learning a strat, and I was losing money when I first started out, just because it's a whole new thought process. So it takes a little bit of getting used to. So I'd recommend if you're using something else and you want to start learning a strat, go back to small entries, 1 contract or something like that. If you're used to trading, getting in with $3,000 worth of options, don't do that when you're first learning a strat, because there's gonna be a learning curve. So step back a little bit. Don't let your pride or ego get in the way, because if you're worried about your pride or ego in this game, you're in the wrong game. So Nike, break above this inside bar here. This is for the monthly candle. A break above this, 134.69. We could go down to the weekly. I don't really like using the weekly, although I did set my alerts, or I did set my targets on the weekly. I would rather use a daily. You have to be a little bit more careful with a daily. You see, this is the entry. I have an alert set for it. So my next target would be here on the daily. It's still a $3 run. The reason I don't really care for the weeklies is when I get in based on a monthly alert, I'm probably only going to be in the trade a week, maybe 2 weeks. That's only one candle when you look at the weekly chart. Maybe 2 candles if you're in for 2 weeks, but you only look at like 1 or 2 candles, and it's kind of tough to gauge off of one candle. Where you want your entry or exit to be. If you start to see some slowing of the momentum, it's harder to see in one single candle. So I would prefer to go to daily. So I'm probably going to move these, but we move this to here, high of 137.92. Edit that. 37.92. And those of you that have followed me know that I'm a more conservative trader. 140.64. I think that's where that last one was that I just moved. T3 inside month up. And that's probably all marked, because I don't know that we'll get above that. That's, we're talking $9 move from entry. I'm probably going to be out by then anyway. If I'm not happy with a $9 move, then I'm probably going to lose money when it's all said and done. So that's my for Nike. Entry is break above the previous month's high. That might not happen for 2 or 3 weeks. It might not happen at all. So this might not even trigger until, let's just say, April 25th, and we only have a few days left of trading. So in that case, it may not make this target, because it might not have enough time to get that far once it triggers. So just keep that in mind. Just because I'm saying this is my target doesn't mean I'm staying in until it hits that. It's not an all or nothing. I get to here, I'm going to start looking for a little bit of slowing. If I have 5 contracts, I might sell 3 of them right here when it gets to the top of this body. The top of this body is 136.45. I may look to get out there, or at least unload some. We'll have to see what happens. I may look to get out right here when we get to this moving pivot, this dynamic moving pivot. I'll have to see how it goes. If I'm up, 80%, and I see it looks like it's starting to lose some momentum, I'll probably go ahead and get out. I'll be thrilled with 80%. So Nike was our first one. Second one will be Pepsi. And we look at the monthly break above this. We have a 3 candle here, followed by an inside candle here. What I do like about this is we have a big green candle here. If you take a measured move target, you basically look at 130.50 as the bottom of the body to 141.37. So you're talking about almost $11. If you add $11 to this, you're at 153. So a measured move target would be 153. We'd be up in here. I wouldn't be holding that long, but that would be the measured move target, would be way up here. And the way you do that is when you have a large candle followed by an inside candle, a lot of times you can take the whole candle, but to be more conservative, take the body of the candle, 130, 50, 140, 140, roughly $11. Let's call it $10 to be more conservative. So you break this 142, let's say 152 for a target. So roughly right there. It might take a month, 2 months to get there. So I won't be holding it that long, so I'm not going to look at that. Now, if I was on a smaller time frame, say a 15-minute, yeah, it might take me an hour to get there, and that's fine. But I'm comfortable holding an hour. I'm not really comfortable. Not that I'm not comfortable, but I'd probably only trade these 2 months out. And if I have to wait, a week for it to trigger, and I'm in the trade for a month, I only have a couple weeks left on that trade before it expires. A couple weeks is still plenty of time, but if things keep, depending on how it moves, I might be on the last week before it finally hits that target, and I just don't want to do that. And I'm sure there'll be pullbacks along the way. It's not, it's not going to just break this and go straight to 152. We might come up, back down, back up, back down. I'm probably not going to ride through all those. Just being honest. So I like to get in and get out. I prefer to not have positions overnight, but I know on a monthly hold I'm most likely going to. But I make sure I buy enough time. The next one is lows. Well, let's go back and look. I don't think I finished this one. We talked about the weekly. Next target up on the weekly would be here. So let's go to the daily. On the daily, put a target level here. What is this? Inside. Let's do T1 inside month up. I'm going to copy that. T2 is going to be here. T2. I shouldn't have. Let's just do that. Just grab just that. And next one up is going to be lows. We're still looking at, with lows, we're still looking at the monthly. A break above this. Now there's not much movement here. You see we only have just over $1 from here to the top of this candle. This is a very conservative target here. If you do the measure move approach, yeah, you have 60, you have almost a $30 move there. So you'd be looking at 221 for a target. I don't know about you, I'm not holding until 221. But break above there. Let's come down, just take a look at the weekly. I do have a target here at the high. Look at the daily. We're pretty much at all-time high. So the only real target we have is here. We do have a dynamic pivot here at 193.50. This is one of those ones where I would probably get in and I would set, I don't even know if you can do it on Thinkorswim, set an alert or just watch for maybe a reversal on a 2-hour candle or 2-hour chart, or maybe a 4-hour chart. Want to be more conservative, maybe a 60-minute chart. Look for a reversal. I mean, 60-minute, you're probably going to get stopped out pretty quick. I wouldn't set that right away, but once we break above this, that's when I would start watching for reversal on a smaller time frame, maybe a 2-hour, like I said, maybe a 2-hour chart. Look for a reversal, and a reversal would be a 2 down. This here would be a reversal. We have a 2 down here. As soon as we broke the low of this candle, that's it. I would get out. Remember, this is still a 2 up. This is a 2 down. Here's a good example. It's a red candle, but it's still a 2 up because it's higher than the previous candle. This is a green candle, but it's a 2 down because it's lower than the previous candle. So here's a good example just in these 2 candles here. If you missed the trade, let's say you wanted to get in on a 222 reversal or 2-2 reversal right here. You wanted to get on a 2-2 reversal. Maybe you missed it. Maybe this isn't a daily chart. Let's say it's a 15-minute chart, and you're trying to scalp it, and you missed it. entry for whatever reason. You had to tie your dog out, I don't know, something. You missed an entry and you're like, oh man, I really wanted in that trade bad. Here's your chance to get back in it right here. You got a reversal. The chart's saying down. Let's just assume this is a 15-minute chart. Chart says down. Once you break above this, that's another entry. You break above that, there's your entry. Exit would be here. So you get in above 171.83. Your exit would be below 173.97. So you still have a $3 move. Then you'd have it again here. You had a 3 candle come down, or you could wait until you break above this one, depending on how you like to play. We have a 222, but they're red candles. This would get my attention. I wouldn't stop out on these because they're still 2 ups, but it would get my attention. Break above that, another entry there. So just because you miss it down here doesn't mean you have to sit out. You do have to worry about your stops. You want to have tighter stops once you're up here. If you're entering up here, you want to have a tighter stop. Right here, I'd probably say if I entered here, as soon as I saw red, I'd probably get back out. As soon as if this candle would happen to turn red at any point, I'd stop out. The problem is with red on this one, you're way down here. So maybe look at a smaller time frame. Let's say this is a 15-minute. Maybe look at a 5-minute. You see red on a 5, you get out. Because if you wait for red on here, you're going to get crushed. If you entered up here on a break of this, and you wait until you get all the way down here for red, you're going to get crushed. There's different thoughts. Some are once you break below this, which would be pretty much a break even, you stop out. Some is the middle of the candle, so roughly right here. You get to there, you stop out. Some of them say the open of the previous candle, you stop out. It depends on where, it's kind of relative. It depends on where you were when you entered. If you entered way down here, let's say this candle opened here, then you could probably have your stop here. You don't want to have your stop here when your entry was way up here. So just something you got to think about and figure out on your own what you're comfortable with. The next one is, we covered this one pretty good, lows. The next one up is McDonald's. McDonald's monthly chart, break above this candle would be an entry. Let's take a look at the weekly. This would be your entry above here. You'd have a target here, which pretty much coincides with this one. Another target here if you're looking at the weekly. Now, however, if you're looking at the daily, your entries here, you have a target here, but it's not much of a move. Another target here, another target here. So that would be kind of what you'd be looking at. And I'm not going to go over all the price levels because you can pull these up on your chart and see what they are. I mean, this really is an easy system once you figure it out and you learn it. Next one is Etsy, and this will be the last one for the monthly. Etsy, you see my broadening formation here. Break above here. Take a look at the weekly chart. This will be your entry. This will be your first target. If we go to the daily chart, entries right here. First target's going to be here. Second target's going to be here. It's kind of what you're looking at with Etsy. Now let's go back. Let's go to the weekly chart because that's the last I have for the monthly ones. And I know that because I have inside month up, inside month up, inside month up. Now I only have 3 for daily. It's Intel, Disney, and Las Vegas Sands. I really don't like trading Intel. Just don't care for it for some reason. But a break above this would be your entry. You have a 3 followed by a 1. You move down to the daily chart. Your entry's here. Target one's way up here. So you have a nice move, nice range here for your target. I'd probably be looking at right here to maybe see a little bit of resistance. Probably right in here from this range, from 66.30 to about 66.70ish. Be looking for some possible reversal in there. But if you don't have any problems, then your target's going to be up here. Next one is Disney. I do like trading Disney. It usually treats me pretty well. thing I don't like about Disney, um, I shouldn't say I don't like it. Um, this low was slightly lower than this one, and I know we don't really follow that when you talk about the strat, but it's still in my head that we made a lower low here. Um, not by much, so you could probably get away with it. But a break above here would be a nice 2-2 reversal. Go down to the daily chart. You could do a 60-minute chart for targets if you wanted. Problem is, look how far back you have to go when you're using a 60-minute. I mean, you could do it. Your entries here. This would still be target 1, target 2, target 3, target 4. There's just so many targets in there. You could do a 2 hour, 4 hour, something. It's up to you. You can tailor the strat to whatever you want. But if you go to the daily chart, target 1's are going to be here. Target 2's here. Target 3's up here. So there's nice moves there that you could catch. And Las Vegas Sands. Go back to the weekly. Same thing here. We have a 2 up, 2 down, inside candle. Now look for a break above this to go up. And we go to the daily chart. Break above this. Yeah, there's a target here, but it's not much of a move, so I didn't count that one. Then you have a target here, another target up here, but I'm sure I'd be out by this time. So, but that's it. In a nutshell, this is this week's watch list. I am not a financial advisor. This is not any type of advice, financial advice, investment advice, trading advice. You know, if you want to watch these, feel free. If you want to trade them, feel free. You know, if it doesn't work out, it's on you. It's not on me. You know, Caterpillar, like I said last week in the last video, Caterpillar didn't work out the way I had it on paper, but I still made money on it. So another thing just to touch on real quick. Rob's philosophy, theory, whatever you want to call it, let's say a 15-minute chart here, is let's go to 5-minute, make it easier, a little more opportunities to see it. Let's look at Apple, because I think it had a pretty good day Friday. Actually, it gapped up and kind of faded all day. Let's take a look at Apple back here. Let's say you entered right here on a 2-2 reversal. Let's pretend you didn't stop out here. A lot of people, let's say we get to right here. A lot of people would stop out right here. They'd sell. They got in here. They'd sell right here. Being that we didn't break below this, it's still 2 up. This one here, we did break below it. Rob's thought process, and it's hard to do. It's hard to do. It takes discipline. But you add once you get here. You already, let's say you bought 1 contract here, or you bought 50 shares, whatever. Once you get this 2-2-2 reversal here, because Rob would be looking at, say, a 60-minute time frame here also, and on the 60-minute, it's still green, still 2 up, it's still green. So Rob has no reason to get out. So you're still in it through this. Once you break above this 2, you have another 2-2-2 reversal here. So you add here. So say you bought 1 contract here, you're going to buy another one right here. Same with right here. You have an inside candle. You got a break above it. That's another add. So you add another one here. So that's kind of Rob's outlook on it. There's a few other strat traders that think the same way. It is hard to do mentally. You get to here and you say, hey, I'm up 50%. I don't want to hold during a pullback, so I'm going to sell. Or you get over to here and you start to see a little bit of red, you're going to sell. Rob's philosophy is that's a good time to add more, because the 60 and the 30 minute are still intact. They're still green. They're still 2 up. There's no reason to get out. I guess it really depends on your account size and your risk tolerance. If you have a small account, that's harder to do, because You know, I'd rather take a $50 win on a small account than maybe a $10 loss. Um, and that happened to me a couple weeks ago. I bought one contract that I forget what I paid. It went up. I added a second contract. It didn't go up much. My contract price, my premium didn't go up much, but the chart told me to add, so I went ahead and added. Let's just say I got in at $1 on the first time, and the second one I got in at like $1.08. So my average is $1.04. So I'm really not up anything. And that pullback, it turned around and came back down. I ended up stopping out for like 95. So I ended up losing. Um, I don't think it was 95. I think it was like, let's just say $1.02. If I wouldn't have added, I would have been up $2, which isn't anything, but it's not a loss. Since I did add, my average is now 104, so now it actually was a loss. So there's two ways to look at it. It's really your risk tolerance. You know, you might be the kind of trader that's going to buy 10 contracts here, maybe sell 5 when you start to see some red here, maybe sell the rest when you see here. You might be the kind of trader that you buy 1 contract here, and maybe you add 1 right here when this breaks above this red candle, and you add another 1 right here. That's the way Rob trades. Not saying either one's right or wrong. It's up to you, but I'm just throwing that out there. It's up to you how you want to do it. So again, thanks for watching the video. You know, I'll check back in next week. We'll review this list, and we'll see how I did. See how it would have worked out for you. All right, thanks for watching, and I will see you guys later. Bye.